Thank you, everyone. And now we will continue on with Matt Gordon, who we welcome back to the stage, who is with Derrick Weyrauch of Palladium One. Derrick? Matt? Again, you just come up here because you like to give me a pack on both sides. How are you doing?
Good, thank you.
Thank you for joining us.
Here we are. Hello, everyone. Right, we better start. You better introduce yourself, haven't you, to the room?
Certainly. Well, I'm Derrick Weyrauch. I'm the president and CEO of Palladium One Mining.
Short and to the point.
Short and to the point.
Okay, PGE, and this is also for the audience listening in from home as well. Very educated audience in front of us, but for some of the guys at home, perhaps don't understand PGEs. What's going on in the market at the moment?
Well, what's going on in any part of the market right now is a little bit up in the air, isn't it? It's been quite interesting, a lot of volatility, a lot of uncertainty. But, the PGE market still remains constrained. There's still a lot of demand out there, no doubt about that. And in the case of palladium in particular, with 40% of it coming from Russia, there's certainly a lot of additional risk with regards to automotive manufacturers being able to continually source supply.
So, have sanctions kicked in with PGEs yet?
There's no sanctions right now. It's still
just the fear
of still flowing, yeah.
Okay, fine. Okay, so we better talk about the universe that you're hoping to operate in the context of the projects that you've got, because you've recently picked something else up as well. So, can run through the portfolio if you don't mind.
Yeah. No. Although the company name is Palladium One, really we're a critical minerals company. Right. So our resource in Finland has 5 metals in it. We also have rhodium that's not in the resource, it's reporting to the concentrate. We have nickel-copper in North America. So in Finland particularly, our Läntinen project, we just came out with a resource. We've got about 4.1 million ounces palladium equivalent there, mainly comprised of palladium, copper, nickel, platinum, gold, and a little bit of cobalt.
Right.
And in Canada, we have the Tyko project, which is a very high-grade nickel-copper story in Ontario. And a couple of weeks ago, we picked up another nickel-copper play, but this time in the Yukon called Canalask.
So all the buzzwords, you got all the buzzwords
Absolutely.
In there, okay, and all the commodities. But it also makes it harder for people to know what you are. And you've already picked up a sort of contradiction there in the sense that your name versus what you perhaps where you want to insert yourself in the marketplace. What are you pointing people at? What should we be looking at in terms of understanding what the story is?
The story is really about critical minerals and reducing greenhouse gas emissions. There's a number of different metals that go into that thematic, so I think that we fit there very, very well with our commodity mix. The name is a little bit of a misnomer. We might have to amend that down the road at some point. But really, get on speed with the energy transformation that's going on with regards to the electric vehicles, for example. But also the PGs, feed into the hydrogen economy. We see a lot more discussion about that happening in Europe, and ultimately I think it'll pick up, but it's not quite there yet.
Okay, there's another buzzword, the hydrogen economy.
Sure.
So this is what I'm thinking about. We've got to kind of hone in on the part of the business which is going to move you from where you are now, the size that you are now, right? You've got to get, it's a difficult market at the moment, I accept, but let's assume it gets back to some sort of level of normality. You've got to hone in on things that you are going to spend your money on, because it's, small companies cash constrained, your time on, because, best efforts on projects which are going to generate that accretive growth that we're all striving for, that growth story. So what am I looking at?
Well, we take a very much a risk-based approach to capital deployment. So we focused in on our Finnish asset to begin with. It was really very much a farming exercise where we could budget for every dollar spent, how much more metal we'd be adding to the books. We've built a fairly large endowment in Finland. And the deposit happens to be polymetallic, and it fits in a couple different silos. That's just the nature of this type of mineralization. But what we're really trying to do is just position ourselves to be on the green energy curve, and there's a number of different themes within that, but we aren't saying we're only going to be nickel or we're only going to be copper, for example, because quite frankly, at this stage of the company's life cycle, we're really not sure what the drill bit's going to show us at a couple of our targets. You know, our Tyko project, for example, we had spectacular drill result last year, 10% nickel at surface over 4 meters. We've extended that zone, but we're currently drilling another target on the property where the soil anomalies are very copper heavy and cobalt heavy, so different but still on the same project.
The award-winning Tyko. Isn't that what you call it?
The award-winning Tyko. It's true.
It is true. But again, it comes back to this point of view. I just need to understand where the money's going to go and what's going to be the best thing for you to focus on. So, and I hear what you're saying, but you've also got to stay relevant as far as the market's concerned. And you know, I think acquisitions are quite good, or picking up projects are quite good for that. Drill bit is quite good for that. But having a sort of clear vision of where you position yourself, and you just said we're not quite sure until we work out what's in the ground, what we need to be, but it is broadly speaking critical minerals because it's topical, right? So how do you avoid being seen as someone just sort of jumping on the bandwagon of a badge, critical minerals, because that's sexy, or copper, that's just sexy. So where again, comes back down, what am I looking at? What's the next big move?
I won't get into the next big move, but right now where our focus is drilling in Ontario, and that's our nickel and potentially copper asset. Right. We started drilling about a week and a half. It took us 9 months to get drill permits. And from a news flow perspective, right, you're going to see results on that for the rest of this year as we progress the activities there, okay. Certainly. Go ahead.
I was about to say, again, you're multi-jurisdictional as well, which is great from, in terms of risk perspective. You say, okay, I'm looking after that, multi-jurisdictional, multi-commodity component, but it's hard to kind of keep a tab on this. So where's the management team? Where's everyone sit? How do you control stuff?
Well, we're very much a virtual corporation. So I'm based in Toronto. Our Vice President of Exploration is on the north end of Lake Superior up in Thunder Bay. Our Canadian Director of Exploration is in Sudbury. And we manage in this virtual world. So we have a small team of dedicated staff to the company, but we have excellent consultants that we rely on so we can turn on and off the spending as opposed to building up a large infrastructure. So we've got an excellent team in Finland, but they're a contract team. So we turn them on as needed to advance the project there.
Okay. I'm looking at the marketplace at the moment. You can't not. You're a finance guy, accountant. You're looking at these things every day, I suspect, as well. What type of business are you trying to be? Because there's some projects, marginal projects out there struggling with cash. There's some good projects out there struggling at the moment to try and garner any attention as well. You've got a track record of M&A. You're quite good at it. Do you think there's a moment, in terms of the staying relevant comment I made earlier, I think this is a moment where you can be picking up projects, and maybe that's the way you should operate at the moment, and not worry about too much about what's coming back from the drill bit, because people don't care at the moment.
Well, that's right. I think that's a very insightful comment. This is a very interesting time in the market where there has been a large degree of pullback in the market cap of a number of different companies that previously perhaps may not have been something we could look at, and now we have the ability to look at them and perhaps even transact. Certainly with a strong cash position, that puts us in a different position than many of our peers, the juniors. Not only do we have, I think, very good assets, but we ended March with $13 million cash in the bank, and very fortunate that we have that position given the current market conditions. So that gives us the ability to have different types of discussions and perhaps look at transactions that might have been out of our reach previously.
Okay, so again, I'm always interested in the strategies that companies involve, especially the small ones, because the decisions down there matter. They matter a lot because they can become either genius or expensive. With the critical minerals conversations that are going on in Europe, obviously your Finland project, it possibly insert itself into that kind of ecosystem. With any potential acquisitions, are you kind of looking at North America versus Canada? Because the two entirely different conversations going on there, and this you get support. Well, there's a lot of conversation about support in the US. I don't know if it actually has materialized yet.
We're definitely focused in on top-tier jurisdictions. That's the only place where we want to play, and that's why we are in Finland. Days? Well, it means where you've got a rule of law that works, the government makes decisions, but you've got technical capability and you know a framework that's stable. So we are most interested in Finland and Canada. That's not to say we wouldn't look at some other, you know, very good jurisdictions, but I think staying close to home makes a whole heck of a lot of sense in jurisdictions where we have experience.
Okay, so say if M&A is an option, a lot of companies come on and tell me it is. We're always looking, and they've no intent, but a sense is slightly different from you. Where's the money that you need to raise? Your shareholders have been going, oh, so dilutive. We can't keep diluting it. Are there interesting models that you've looked at out there in terms of the way that you can potentially finance not just your own activities, but some of this M&A?
Well, building on some of the comments that previous speakers had with regards to M&A, you know, if the market is not valuing something, you got to look at what's the fundamental value, and is there a deal to be done where it could be accretive for our shareholders? There's a number of different ways to do that. If you're looking at projects that are sufficiently advanced, you can look at the economics and compare the relative NAVs, or you can look pounds on the ground, ounces in the ground, however. But yes, you know, M&A is something we would consider, and we would look at it from, you know, what are our existing shareholders going to get? Is it accretive to do this transaction versus that, or not doing one at all?
Right. And what would you be looking at? I'm sorry to go on about this one. It makes me quite uncomfortable. But it's just really hard to stay relevant at this. There's so much white noise, and there's this big market shakeout going on at the moment, which I think is fantastic. Because I think these, like I refer to them as marginal projects, or these suboptimal projects, are going to struggle to garner any interest and certainly raise any capital, I hope. And that's kind of good news for you, because less competition. But the reality is, investors out there have got lots of options at the moment, but they're all sitting back waiting to see what happens in the market. So how do you play that?
Well, picking up on your comment there, you know, I don't think looking at a suboptimal project is something we'd be interested in. We'd want to look at things that we believe in, where there is resource growth potential. Obviously, everybody would like to have something that is nearer term in production. Those are like finding hen's teeth, right? So near term might have been redefined recently to be, you know, 3 to 4 years, as opposed to what everybody was chasing recently at 2 years and under.
Okay, so maybe we should talk a little bit more about you know, the future. You're here to sell your company. So for you, the next 12 months looks like what? I imagine the next 6 months is like what on earth's happening to the market, and after that you might be able to make some decisions.
Well, we are actively drilling right now in Ontario, the high-grade nickel copper project. So that is going on. I anticipate that going on for the remainder of the year.
Right.
In Finland, that project, we are advancing it with regards to permitting. When we published our resource at the end of April, we came up with a large resource. Advanced metallurgical studies have been done. We know we can produce really nice concentrates, both copper and nickel. So that all looks very good. But we're moving on to the next step, which is focusing in on permittability of the project. Let's get the baseline sampling work done, you know, on various areas, whether it be water or phytoplanktons or whatever, and put ourselves in a position where we could go into an EIA process if we choose to do that. And I would hope we could do that first half of next year.
Okay. And enough money to do that, to get there?
We've got enough money to do that, yeah. We're fully funded for those activities. Really, the big spending that we have is, I'll call it discretionary, given where the market is right now, is if we're going to do more drilling or do the full-blown hydrological studies and get the various monitoring wells in place.
Right. Okay. And what's your take of the market at the moment for other juniors? We just talk a little bit more broadly. What are you seeing? So I mean, you're here to talk to investors, and you're talking to some of the big banks that are here. They must be concerned about the state of the market too. What are those conversations?
Well, everybody is concerned. I think there is a little bit shell-shocked with the amount of opportunities out there. As you say, there's a lot of companies looking for money, and it's segregating the various opportunities and figuring out which ones make the most sense for the particular risks that you're after. We're very much still an exploration stage company, and so we need to talk about the opportunities that we have on the properties that we have and the quality of the targets we have. This is a risky business, but still you need to balance how much risk you want to take when deploying cash. So we just need to talk about the quality of the work we've done, the disciplined approach that we've taken to developing targets, and then, if investors are interested in taking that type of risk in terms of their portfolio, perhaps they'll buy some stock.
Perhaps they will. Well, I think we're going to wrap it up there. Yeah,
sure.
Okay. Well, thanks.
Well, thank you very much. Pleasure seeing you again.
Yeah, appreciate it.